Hey guys, welcome to this video. In this one, I'm just going to rush over the yens now they've started moving a lot. Many of you will have seen my CAD yen video I did about institutional traders. I called it short, it's just come down, so if you took it, well done. My free training's underneath, as always. So what did we just see a minute ago? Well, I'm going to start actually on the 4 hour because I thought this was really interesting. You'll know if you watch me, I use MAs to gauge market value. And what's happened here is you've come smack down onto this key 200 MA. Okay, it's not really a shock. If you think that's just by accident, it's not. Okay, markets follow MAs. That's just how things go. And if you scoot your time frame up one more to your daily, okay, you can see if I just draw a line along here that you had reasonably early support. So this would have been great if you wanted to take longs for hedges, and many of my members would have done that. It's a really, really good spot because you're coming back in between these two key moving averages that the price tends to track quite strongly, and you've seen that rejection away. I think probably the most significant thing in this analysis is exactly that. Okay, you'll notice if you just look back, what happens is once you start to come back to these MAs, it really affirms that strong uptrend, and especially a dip in between this 20 and 40 is really significant. And that's exactly what you just had again. So you've just had reaction, okay, you had a forceful move down, and it just seems that traders have completely rejected that. And it was really intense. I mean, if you look at the fall that just occurred, peak to trough, you know, it's almost 2%, which is quite significant on the yen, but it is no surprise. I mean, I've been calling it short for ages. It's come up and up and up. And once your stochastic oscillator starts to look like that, you really just have to wonder, when is something like that going to happen? And that's exactly what did just happen. Okay, many of you would have had shorts, many of you would have taken profit. So well done if you did. As I always say, eventually markets fall. They just cannot rise. It's not economically viable to have a market rise forever because your currency would just be extremely weak. Okay, it's already quite weak, but it would be extreme if this kept going to 200, 300, 400, like it used to be. Okay, there's an equilibrium that I think the Japanese like. And again, as I said, it's no surprise it comes within this previous high. Okay, traders look at these prices and they say, well, that's a very high price. I would like it short there again. And that's exactly why that is very viable as a place to get short. And I said that, and I said that, and I said that. So if you're wondering why the market fell and you're thinking, oh, it was just this or it was just that, just look, okay? That is a very high price. It's very ideal as a price for market powers to intervene with the largest amount of capital, although it has been rejected immediately. Going forward, I would let the market settle out. If it re-pushes on the highs, I would look to get short again and just look to trade to the downside. Any further falls and I'll be long. Thanks for watching. See you in the next one.